So say today we are taking up carrier's legal liability insurance. Carrier's legal liability insurance policy. Before we proceed, I will give you some update related to this product. See, the total road transportation business in India in 2024 is estimated to be around $157.45 billion. So with the majority of India's freight transportation, over 70%, carried out by road, means the road transportation is almost 70% of $157.45 billion estimated total road transportation business. Such a big market it is. Now the market value of the Indian road freight transport industry is estimated to be around INR 12.13 trillion in 2023. Obviously, last year it would be somewhere around 13 or 14 trillion. So factors like urbanization, population increase, e-commerce boom, and rising income level are driving the growth of the road freight market. We are concerned with the road freight market. And India has the second largest road network, and its national highways span a total length of 146,195 kilometers, forming the primary network of the country. In the last 5 years, you must have heard Nitin Gadkari, who is the road transport minister, how speedily he is working on national highways. How many expressways are there? So during the last 5 years, this figure has increased very rapidly. And today India has become second largest road network. When the road network is there, then only the transportation business will flourish. Transportation business by road is totally dependent upon the good conditions on highways or road network. It is totally dependent upon the road network. So from this perception, you can see India is far, far ahead of the other countries. India is the second largest road network. An estimated industry of road transportation of $157.45 billion. This is an amazing figure. This road transport I am stressing upon because there are other ways of transportation also. If I have to send something, I'll explore all the ways. If I am living near a port, even the waterways will be convenient to me. By ship, by steamer, boat, or any kind of hull. If I want to incur higher cost, airways I will prefer. By air cargo carrier, helicopter, or by any devices, even drone. If my godowns are attached to the railway stations or nearby area, even railway is comfortable because there are goods train or specific trains. But the best suitable method is roadways. Because if the goods is transported through road route, then the GCCVs are used, goods carrying commercial vehicle. A goods carrying commercial vehicle can directly reach to your godown while train cannot. Aeroplane cannot, ship cannot. So the most comfortable way is road route. And the GCCBs have again multiple varieties. Light commercial vehicle, medium commercial vehicle, heavy commercial vehicle, tanker, refrigerated vehicle, open body, closed body. All these kind of vehicles are used for goods carrying commercial purposes. And we are concerning with road route only. Because the policy we are discussing today, Carriers Legal Liability Insurance, insures the risk of road transportation only. Now, why this policy is necessary? Because the transporter who is in the transportation business, he is transporting the goods every day from one place to another place. Every day. It depends upon his fleet, how many vehicles he has got in his fleet. All the vehicles are used for transportation purposes only. Now the question is, suppose I have got 10 vehicles and all the 10 vehicles are going every day, duly loaded with the goods of any kind. The possibility is one or two vehicles may collide or may suffer accident or may be overturned, because anything can happen during the way. In that case, what will happen? The owners of the goods, whose goods I am transporting, they will ask for compensation to me and I have to pay. Why? Because I have charged the freight to safely deliver their goods to the other place. And if this is happening any day or every day or almost a few days in a month or few days in a year, I don't know how much compensation I have to pay. Because a complete vehicle can burn, can overturn, can meet with an accident. So I can never even estimate how much loss I have to pay. So, जी आएगा, ये पॉइंट बीच में आएगा, आप ध्यान से सुनिएगा, मैं आपको अलर्ट कर दूँ, ठीक है? तो जब ये पॉसिबिलिटी हो, व्हेन द गुड्स इज लाइकली टू बी डैमेज्ड एवरी डे और एनी डे, in that case it becomes a big liability, and that big liability the transporter cannot afford. So the risk related to the goods transported through his vehicles is insurable under the Carriers Legal Liability Insurance policy, and he will definitely prefer to take this policy to cover the risk throughout the year, because that way the entire risk of damages or loss to the goods has been transferred to the insurance company, and now the insurance company will pay the claims. As simple as that. So this is the only policy coming for the rescue of the transporters or carriers or logistic firms to cover such big liabilities. Now who can take the policy? Those who are engaged in transportation of business, and they are the transporters, carriers, logistic firms. Now the goods or cargo is covered only. which is carried by the vehicles of the transporter. Now these vehicles could be owned or hired. Unless both kind of vehicles are insured under the policy, the total risk cannot be covered. So this policy is providing the coverage for every kind of vehicle, may be owned or hired by the transporter. So either the goods is damaged in a owned vehicle of the transporter or in a hired vehicle of the transporter, the compensation to the loss of goods will be paid by the insurance company under the carrier's liability policy. So what is the risk coverage? Risk coverage is very limited. The risk covered in the carrier's legal liability policy to the goods or cargo or commodities is by only fire, explosion, accident and negligence. But this negligence could be of the insured, his representatives, his servants or his loaders, unloaders, the people who are engaged in his business. If the vehicle is damaged, the insurance company will not pay claim under the carrier's legal liability insurance policy. Only 4 risks are covered: fire, explosion, accidents and negligence. But 2 more risks can be covered on payment of additional premium. These are right and strike and terrorism. So they are called as add-ons. Add-ons of the policy. Now certain features of this policy are well known. First of all, this policy is meant for 12 months only, renewal every year, given to the established transport firms, but with one condition, that the transporter will take a comprehensive or a package policy for each of his vehicle which is used for carrying the goods or for transportation. There has to be a package or comprehensive motor insurance policy, because without that policy, a commercial vehicle cannot fly on a public place. That is mandatory as per law. But the requirement is only for third party. Even if the third party coverage is there, that is sufficient. Our requirement is that the vehicle should be insured under a package policy. And normally all the transporters are insuring their commercial vehicles under a package policy only because they understand that if it is damaged, if it is meeting with an accident, the cost would be very high. And all these vehicles should be in a roadworthy condition. That roadworthy condition is certified by the transporter or by issuing a fitness certificate. So whatever number of vehicles are there in the fleet of the transporter, all those vehicles can be insured under one policy, and that policy is called as a fleet policy of carrier's legal liability insurance. Certain other documents are also maintained by the transporter, like logbook, consignment note, and the minimum premium for this policy is 500 plus GST. Now this is the most important aspect from the point of view of transporters, because they will prefer the policy which is providing to them some comfort in case the goods is not unloaded. Means what? Cover duration means when the risk will start and when the risk will expire. So there are 2 points in the case of transportation business. First point is called point of origin, where from the vehicle will start duly loaded. And the last point is point of discharge, that is final destination, where the goods will be uploaded or unloaded. So whatever risk or whatever loss or damage are taking place at the point of origin, that is also covered while the loading and unloading operations are there. If during the loading operations goods is damaged, that is also covered. If in journey anything is happening, that is also covered. If anything happened at the go down or final point of discharge, it is still covered. If the goods is not unloaded on first day, second day, third day, the risk is still covered. But after 3 days, the risk will not cover. Means the policy ends with unloading or expiry of 3 days, whichever is earlier, at the final destination. So this is the comfort given to the transporter because commencement of cover will start from place of origin with loading of cargo or goods of merchandise on the vehicle and remain until the same is unloaded at the point of discharge or expiry of 3 days from arrival of the vehicle at the final destination, whichever is earlier. That means even if the vehicle has reached to the destination and still the goods is not unloaded, for 3 days the risk will be covered. On 4th day, the risk is terminated. So this is the cover duration of this policy, and that is most comfortable from the transporter's point of view because 3 days are sufficient period when the go downs are almost vacated and providing the place to unload the goods. First day, it may be possible that the go down is fully or totally full. There is no place to unload the goods. Second day, it may also possible. That is the reason 3 days comfort is provided. So how the proposal will be rated of this policy? 3 important things are there: gross vehicle weight of every vehicle, limit of indemnity selected by the transporter, and add-on selected by the transporters. On the basis of these things, the premium will be rated by the underwriters. But there are factors which will provide the discounting in the premium rating also, that is type of vehicle body, maybe closed body, trailer, refrigerator, tanker. Fleet discount, how long is the fleet, past claim history, if it is good, other parameters like age and fitness of the vehicle, that will make the insured entitled for discount. Even if the type of cargo is limited one or a specific one particular is there, which is non-hazardous, still discount rate can be discounted. Say suppose cement is there, woodwork is there, metallic items are there. These are non-hazardous items. Compulsory excess is 2% on each claim, that is minimum to 5,000. And terrorism risk, in case of terrorism, it can differ. So there are certain general exclusions of this policy. Say for example, if third party loss is there due to the vehicle of the transporter. Any person died, suffered an accident, got disabled or injured or severely lost some body parts, carrier's legal liability insurance policy will not pay any compensation. Because this risk is already covered under the package policy of the motor vehicle which he is using, and that vehicle is already insured under a package policy. Contractual liability is not covered, goods belonging to servants or employees of the transporter is not covered. Right and strike is not covered, but if the add-on cover is taken, it can be covered. Act of terrorism is not covered, but if the add-on cover is taken, it is covered. An errant defect of vice, including insects, is not covered because there are certain edible items which are rotten or get decayed by its own properties if they are not used within the limited time, because certain edible items have very limited life. Say milk products, fruit and vegetables, etc. Yeah. ठीक है, ठीक है। वो फिर भी थर्ड पार्टी लायबिलिटी में आएगा। फिर भी ठीक, क्योंकि थर्ड पार्टी लायबिलिटी की एज पर मोटर व्हीकल एक्ट डेफिनेशन बहुत वाइड है उस व्हीकल से, व्हीकल के किसी सामान से, व्हीकल के किसी पर्सन से अगर किसी को कोई इंजरी या डेथ या डिसेबिलिटी होती है तो मोटर व्हीकल एक्ट उसको कवर करता है और कंपनसेशन भी पे करता है। इसलिए वो मोटर व्हीकल एक्ट में कवर्ड। तो कॉन्सिक्वेंशियल लॉस भी कवर नहीं होगा। हाँ, नहीं, दूसरे के गुड्स को नहीं करती। अगर ट्रांसपोर्टर के व्हीकल में जो आइटम है वो डैमेज हुआ है तब तो कैरियर लीगल लायबिलिटी पे करेगी। करेक्ट। ये कुछ जनरल एक्सक्लूजन्स हो गए। अब अगर लॉस की, नाउ there are certain reasons which can cause the losses. So those losses have to be immediately reported to the insurance company, because without physical verification of the loss or damage to the goods, insurance company will not pay the claim. And this is possible when the immediate intimation is given to the insurance company, because after verifying the policy, insurance company will definitely send a surveyor who will rush to the spot and will get the damaged goods inspected, will take the photograph, and then only he will assess the loss. On that basis the claim will be paid. So immediate intimation is must for the physical inspection of the loss or damage. And at the same time, for settling the claim, certain specific documents are required. Because in this policy the documents are used are a little different. Here the motor policy is required, vehicle registration certificate is required, these two are common. But if the goods is carried under any specific agreement, that copy of agreement is required. Certificate of registration is required because this is issued by the authorities under the Carriage by Road Act to authorize transporter to do the transportation business. And then fitness certificate of the vehicle, proposal and claim from goods received, that is GR, and goods forward note. These are the documents which are maintained by in the business of transportation, and they are all required to settle the claim by the insurance company. In addition, suppose you are giving a carrier legal liability policy to any of your client. So the policy cannot be given unless you are taking the basic information which will decide whether the cover can be issued to them or not. And this bare minimum basic information is sufficient to underwriter to evaluate the proposal, at what rate he should give the policy, and what decision has to be taken about the acceptance of the cover. This basic detail is number of vehicles to be covered, GVW of each vehicle, limit of indemnity selected by the transporter, add-on selected by the transporter, type of body which the transporter is using, that is closed body, tanker, others, number of trailers, refrigerated vehicle, etc. Then how old are the vehicles, what type of cargo he is carrying, what is the past claim history, or whether he needs a single policy or a fleet policy. So this information has to be provided by the transporter in the proposal form, and then only the policy will be given to a transporter. But at the same time, it is advised that maybe the transporter is having 10 vehicles or 50 vehicles or 100 vehicles or 200 vehicles. One single fleet policy is advised for transporter to take. If he is having 1 or 2 vehicles only, then the single policy can serve the purpose. Otherwise, for long number of vehicles, in case of more than one vehicle of the same insured can be covered in a single carrier's legal liability policy. It will be called as fleet policy, where all the vehicles will be listed in the single policy, may be owned or hired both. Secondly, a comprehensive or package motor insurance policy is mandatory for the vehicles which are used by the transporter. So carrier's legal liability policy will provide the coverage of any kinds of goods carried by the transporter. Only thing is that he should not carry the goods which is legally not permitted. Legally not permitted means there is a list of contraband items which are not permitted to carry by a transporter. This list of contraband items may be as per the law. Say for example, drugs, liquor, certain specific species of animals, etc. Now, the carrier's legal liability policy is given to road transport company working as common carrier. Here comes that question. The carrier's legal liability policy covers liability, where marine policy covers property. Now, Mr. Deepak is asking why he is taking carrier's legal liability policy, why not marine policy? The answer is carrier's legal liability policy covers liability, whereas marine policy covers property. If I am the owner of the vehicle, I can take marine transit policy for my goods which I want to send from Jaipur to Vadodara or Jaipur to Ahmedabad anyway. If I am owner of that goods. But transporter is not owner of any goods. He is only transporting. He is charging freight for that. He is custodian for that good for certain time till it is delivered. So if in his custody the goods is damaged, it's a liability. So for that liability only he wants the coverage. What is liability? In terms of finance. Whatever loss or damage to the goods has taken place, transporter has to pay because he has charged freight for that. But marine policy can be taken if I am the owner of the goods. Owner can be different. A buyer, a seller, a consignor, a consignee. So marine transit policy is good for owner of the vehicle, not for the transporter. Because transporter does not have insurable interest in that goods. He has no ownership. He don't even know the value of that goods. Value is given by the owner of the goods. So marine transit policy will not pay his liabilities. And then goods carried by those hired vehicles also. That is also covered in this policy. Here one good thing is that under insurance is neither applicable to the motor insurance nor to the carrier's legal liability insurance. How come the under insurance here? If the motor insurance policy is giving a comprehensive policy to a truck, it is given on the basis of ID, that is insured declared value. Insured declared value means X showroom price minus deductions at the certain percentage which is given in the table. Then it will be insured on the market value basis. So for 5 years, the table is applicable. Thereafter again 10% every year the value is deducted. Why? Because vehicle is used and this is depreciated every year. So the value of the vehicle will reduce every year. If it is insured on the IDA basis, there is no question of under insurance. But in carrier's legal liability insurance, the under insurance is not applicable for one reason. The transporter is not the owner of the goods. He don't know the value of the goods. He don't know whether it is underinsured or overinsured. He is only a custodian. So transporter will take the policy on the basis of his total turnover. How much turnover he is doing during the policy period. That will decide. So on that there is no underinsurance. That means underinsurance is neither applicable to the motor insurance nor to the carrier legal liability insurance. In carrier legal liability insurance, the claims are paid on the basis of the liability decided by the insured himself on the basis of two factors: any one accident or any one year. The liability will be paid by the policy in full up to the AOA and AOY limit, subject to policy deductibles or compulsory excess. So again, Deepak, the point for you. Marine policy cannot be issued to carriers as they don't have any insurable interest in the good itself. If there is a marine policy, it will indemnify the consignor or consignee for the loss of goods arising out of the covered perils under marine insurance. So consignors or consignees, buyers or sellers are owners of the goods. In marine insurance, the insurable interest fluctuates because it is transferred at any point of time. But if such perils after payment of the claim to them under marine insurance policy will go for recovery proceedings against the carriers. If any owner, suppose I am sending a bike through transport, I got my bike insured. I have a separate policy for that. And in transportation, bike is damaged, I can claim from my transporter. But here I will prefer to take the insurance claim from insurance. Now insurer will take a suppose it's a letter from me. If he wants, he can recover it from transporter also. So owner of the goods can take the marine policy, but not the transporter. Now how the sum insured of the policy will be decided? Insured have to decide two limits: any one accident or any one year. This is simple to calculate any one accident limit of any vehicle. So for example, one truck is fully loaded and as per the total of the GRs, that is guilty or that is goods received, the total goods loaded in the truck is costing to say suppose 6 lakh rupees. It means as per the total capacity of the truck, the goods of 6 lakh rupees can be loaded. But not in our case because the goods can differ. But the transporters have got a basic idea that in one truck normally 5 to 6 lakh or 6 to 7 lakh, this kind of money is involved for the goods. So the transporter can select that any one accident limit should be 5 lakh, 6 lakh, 7 lakh. In case of tanker, this is much easier. Because there the maximum capacity of that tanker is multiplied with the maximum rate of the product. So suppose one tanker is used for carrying the petrol or diesels, and the maximum carrying capacity of the tanker is 5,000 liters. The maximum rate of the petrol applicable is say suppose average 100 rupees. So in one time, what is the maximum possibility of the loss? Even if the tanker is overturned or burned or accidented, the maximum oil is 5,000 liters into 100, that is 5 lakh rupees. So under no circumstances the loss could be more than 5 lakh rupees for goods only. excluding tanker. So here annual exchange limit would be 5 lakhs. Simple to calculate. Now suppose the transporter has got 5 tankers. All the 5 tankers are used throughout the policy period on everyday basis. So 5 lakh into 5, 25 lakh into how many days the working day is there. Say suppose out of 365 days, 300 days it is working. 25 lakh into 300. That would be any 1 year turnover. But this is simple in case of tankers. If the mixed material is used, the method will be different. And rates again are chargeable according to the nature of the goods. Suppose the most hazardous items, say like petrol or diesel, they are highly inflammable. It could be 1 rupees. Or vegetable or fruits or edible items are there, rate could be even 20 paisa, 25 paisa, 10 paisa. It depends upon the nature of products. However, a carrier's legal liability policy is issued. The transporter's total business for 1 year done through his own vehicles or hired vehicles across the country, pan India, the liability is covered. Now what is the across the country? Anywhere, suppose I am sitting in Jaipur, my transport office is in Jaipur, but I am sending the goods to Chennai, to Kolkata, to Mumbai, to Ahmedabad, because there again I have my own transporters, my goods is loaded in their godowns, and there from the people who are sending their goods can collect the delivery of their goods. That is how the transportation business is done. So if a person is taking carriage legal liability who is in the business of the transportation or carriers or logistic firms, this becomes very simple for him to get the compensation from the insurance company for the goods which is lost or damaged during the transit. Now this policy is not compulsory as per the provisions of the Public Liability Insurance Act 1991. That doesn't make the policy compulsory. The compulsory policy is only Motor Vehicle Act, as per Motor Vehicle Act, and that is for third party parts or for third party liability. Now the question is, even if a transporter is not taking the policy, still he can do the business. The only thing is, if the goods is damaged or lost during the transit, he has to pay the compensation out of his pocket. Now, if it is happening some 10 times in a year, all the 10 times he will pay from his own pocket. Now, suppose total vehicles are overturned 10 times, he has to pay compensation from all the total losses 10 times from his own pocket. So no businessman will take that kind of risk. It is difficult for him. If he is doing unknowingly or without knowledge or maybe deliberately, his business may not continue. So the older is the transporter, the better knowledge he must be having of this policy. And he must be taking this policy since beginning. Because this is not coming under the compulsory category of insurance policies. But this is necessary. Without this, the customer cannot do. Because normally, even if the goods is not unloaded, it is in the vehicle, or say second day, still there is the possibility of loss or damage to the goods. Without accident, without fire, without explosion, there can be loss or damage to the goods. Because of the infection of other items. So question is, when you are going to sell this policy to a transporter, you will face one problem. Transporters are there in every city. Transport nuggets are there in every city. Every transporter is having 5, 10, 50, 20 according to its size of business, the number of vehicles. If they are not having, they can hire the vehicles. And they must be using the hired vehicles for their transportation purposes. But when you are going to sell the policy to a transporter firm, what difficulty you will face will be that firm is very old. He is doing the business since last 10, 15 years. You have come out with this policy in last 2, 3 years only. He must be taking the policy from some other insurer. Somebody must be coming to his office and giving the policy. That policy is continuously renewed. Maybe he is satisfied or unsatisfied. If he is unsatisfied with that insurer, your entry could be easy. But suppose if he is satisfied with that insurer, you have to display your skills. Because you have got only one reason to tell him that so far we were not having this policy. Now we have this policy. You can insure your entire business for the complete 1 year. Whatever goods is damaged during transportation activities, wherever it is, we will pay the compensation for that. The only condition is you have to take the comprehensive policy for your own vehicles or hired vehicles. For hired vehicles, if you are not taking the policy, because you have no insurable interest in those vehicles, nobody. The owner of vehicle will take the policy. We want only the policy copy to prove that yes, the policy is there. Because this is must. On the date of loss to the goods, suppose it is found that the vehicle was not having a purchase policy on that date, or it has expired 2 days, 3 days before only. Even in that case, this carrier's legal liability insurance policy will not pay any claim for loss of goods or damages, because the motor package policy was not found valid. So that criteria must be fulfilled. Documentation part has to be complied with by the transporter, because normally in transportation business there are 2, 3 different kind of documents which has to be maintained by the transporter regularly. Logbooks, consignment notes, yearbooks. They are the documents seen by the insurance company at the time of claim only, not at the time of insurance. At the time of giving the policy to the transporter, the competition is only of the rating or features of the policy. Suppose our policy is having some good features, this is good to you, you can easily convince to your customer. So the competition is only on the pricing. So the policy is good, no doubt. Transporters are everywhere, you don't need to create the business. In every city you will find the transporter firms. Every transporter is normally having 5, 6 vehicles. The double benefit to you is, once you succeeded to give a carrier's legal liability insurance policy to any of the transporters, you can make your entry easy in his firm, and you can also insure his commercial vehicles. So that's again the requirement. So once you enter into a firm for insurance purposes, you are a successful salesman, successful executive, successful marketeer who can get the business. This is a retail policy, no doubt. People who are directly dealing with the banks, that business is easier to do. But for taking this carrier legal liability insurance policy, the transporter will not take the loan from the bank. He may take the loan from the bank for purchasing a transport vehicle. Then also you can find out all these details. So policy is good, and almost every general insurance company is having this policy. They are selling it since years together. This is not a new policy. This is not a new coverage. The competition is only on the pricing. Mostly the features are almost same. But the policy is must for every transporter. Without this policy, the transporter cannot do the transportation business, because he never know how much liability he has to pay for the loss or damages during the policy period. So this is all about the carrier legal liability insurance. Now if you have any questions, you can ask. If you have any questions, you can ask me. हाँ, मैंने आपको बताया ना अभी, ये देखिए। हाँ, यही नहीं, डिफरेंट 5 to 6 पॉइंट की जरूरत ही नहीं है। इतना ही सफिशिएंट आप ये कहते हैं कि ये एक लाइबिलिटी पॉलिसी है, वो प्रॉपर्टी पॉलिसी है। इसमें केवल उसकी ओनर ले सकता है मैरिन ट्रांजिट पॉलिसी, और ये क्योंकि लाइबिलिटी पॉलिसी है तो इसको कैरियर लीगल लाइबिलिटी को ट्रांसपोर्टर लेगा। इंश्योरेबल इंटरेस्ट उसका है मैरिन ट्रांजिट में, इसमें इंश्योरेबल इंटरेस्ट है ही नहीं, ये केवल कस्टोडियन है। तो यही 3-4 पॉइंट है, बस यही सफिशिएंट है, बस डिफरेंस बताने का। नहीं, मैंडेटरी नहीं है। It's a choice, but this is necessary looking to the requirement of the business. जरूरी हो जाता है, नेसेसरी है, नेसेसरी है उनके लिए, क्योंकि इसके बिना उनका बिजनेस इम्पॉसिबल हो जाता है। इसलिए तो पॉलिसी सेलेबल है, बहुत ज्यादा सेलेबल है पॉलिसी। रेशो सर अभी अपने लिए कम है, क्योंकि अपन ने अपनी इसको सीरियसली, वी आर नॉट गोइंग टू बुलिश इन द सेल ऑफ दिस प्रोडक्ट। जी जी, उसके लिए आप 5 मिनट डिवोट कीजिए, उनको कन्विंस कीजिए कि अगर मान लिया ये गाड़ी आपकी ओवरटर्न हो जाती है और इतने का लॉस हो जाता है। हाँ, सर उनके लॉस के कंपैरिजन में ये अमाउंट बहुत छोटा है। वही चलिए सर, मेल देखिए अपना।